Well, good evening. Welcome to our session tonight, this live webinar. So glad that you've joined us. My name is Michael Thompson. I'm one of the trainers for Warden Brothers, if I haven't met you before. And I have with me our other trainer, Julia Ormond, who's going to be presenting tonight. Julia, always good to have you.
Good night, Michael. Good night, everybody.
We're going to get started here in just a couple of minutes, but I do recognize that tonight we probably have quite a few folks that have joined us from our freestockcharts.com website. And I just want to welcome you and let you know that we'll be looking at TC2000 version 12 tonight, which is our big brother to freestockcharts.com. And in just a minute, I'll tell you how you can try a free trial of it. If you're already on version 12 of TC2000.com, we're really glad that you're using it, excited about the developments there. And that's what Julia will be using tonight as she teaches on targeting the bottom of a pullback. Just a couple of quick things. If any time tonight you have a question for Julia, for us, you have a question box. It should be kind of to the right of your screen. You're welcome to type a question in. She and I are the only ones that can see that. We'll answer as many of those as we can. Some of them we'll answer by typing back to you, and others we'll answer as we get to the end of the presentation tonight for everybody. Broader questions will be great, and we'll try to cover as many of those as we can before we get out of here tonight. Also, many of you will probably want to watch this again, and right here on the home page at warden.com, you'll see that right at the top of that list of webinars will be the targeting of the bottom of a pullback webinar. Tomorrow that link will turn into a link to the archive, and you'll be able to see the entirety of this webinar again as many times as you'd like, so you can review some of the things that we talk about tonight. Now, for those of you that might be coming over from freestockcharts.com, I'm going to quickly flip over to my TC2000 screen. This is TC2000, which is the big brother of freestockcharts.com, and you are welcome to give it a free 14-day trial. If you do that, all the stuff that you've done in your freestockcharts.com will come over with you. Your watch list, your chart layouts, all the things that you've created. And to get that free trial, just go to tc2000.com. You can see I have it right here in my browser. And you'll get a login screen. Enter your freestockcharts.com login information. It will open for you in what we call demo mode. And then right up at the top left corner, you can click the Marketplace button, and you'll be offered a free 14-day trial. You're welcome to log in. And as soon as you do that, the services will start working for you, and you'll be able to use TC2000 for those 14 days for free. If you decide to change your mind, you don't want to subscribe, you can always go back to freestockcharts.com with no problem, but this will give you a chance to try the premium product and what you see Julia using tonight. So if you came over from our freestockcharts.com website, we do welcome you and thank you for coming. I hope you enjoy the session tonight. Very timely session, I must say, Julia. It was like you picked this for the market. I'm going to go ahead and hand off to you while we're talking, but
Okay.
What a close of that market today. My goodness.
Well, you know, last week when I was thinking about what topic we should be doing, I was looking at what the S&P 500 was doing. In fact, let me just pull up a chart of it real quick, and let me know if you can see that, Michael.
I can't, but I'm usually the last one that can. I think the attendees probably can.
Okay. So anyway, I'll
Yes,
talk through it for just a second. But I was looking at a chart of the S&P 500, and as I was in the midst of thinking about what would be a good thing to talk about, we had just experienced this pullback that took place back here, you know, on the 22nd and 23rd or so, and had just bounced off of that. And one of the things that I've been talking to people about in classes recently is pullback situations and what makes those pullback situations tradable as opposed to just being a pullback that could continue to move lower. So I thought it would be helpful if I put together some content specifically around what it is that makes a pullback a good tradable or high probability of being a tradable pullback. And then layered on top of that, Michael, one of the things that I get asked a lot is, you know, I think a lot of people find themselves in a situation where they know what trade signals to look for in the longer term sense. And you notice that on my chart that we're looking at right now, I have a stochastic and I have a MACD down at the bottom of the chart here. And both of those are oscillators, and it's a very common kind of setup for people, especially retail traders and investors, to use oscillators in their trading. And often what people say to me or ask me is, I know what signals, quote unquote, I'm looking for from my oscillators. In the case of a stochastic, maybe you're looking for it to cross over 20. In the case of a MACD, maybe you're looking for it to cross over its trigger line or the zero line or something. So we have these signals that we look for. We look for divergences between price and the indicators. But the question always comes up when we're looking through charts together, what turns that signal into an actual tradable moment? Because it's not always true that that trigger perfectly coincides with the right moment to enter the trade. You agree with that?
Absolutely. Absolutely.
Yeah. Because a lot of times what you'll find is, for instance, with a stochastic or a MACD, they'll roll over before, well before the price rolls over. Or they'll roll over, the price will roll over, but then the price will pull back almost immediately after it rolls over. So my sort of mission here is to give you a streamlined, simplified process for identifying a tradable moment. And specifically, guys, I'm talking to those of you, and gals, I'm talking to those of you who are relatively short-term traders, maybe you're swing traders or the equivalent of a swing trader intraday. You know what I mean by that, Michael? So inside, as opposed to a swing trader, maybe you're an intraday trader, but you're trading segments of a trend inside of trading days. It might apply to you that way. So either way, here's kind of what we're talking about. This is sort of a bigger picture topic. So sometimes in our webinars, we spend time looking very specifically at a certain candle pattern, or we spend time looking at what makes a good divergence between price and an indicator, or what indicators mean, or how to use them. This is a webinar that I think ties a lot of that information all together. So what I want to do is I'm actually going to jump over here and I'm going to share a PowerPoint with you guys, because I think it's easier for you to follow if we look at it this way. So Michael, when you can see my PowerPoint, if you'll let me know, I'd appreciate it.
We got it.
Okay. So basically I threw together some information here, and I want you to look at these three questions at the broad level. Okay, these are the most sort of the highest level questions that you could ask when going through the process of finding these pullbacks and these tradable moments for swing trades. And I'm going to be as specific as I can be. So let's talk about these three, and then I'll dig down into each one. So the first question is price either already in an established trend? We're going to be using long examples, trading long as examples. So when I say is it in a trend, ask yourself, is price already in an established uptrend? Or has it recently started a new uptrend, meaning that it's already created a new higher low off of what was previously lower lows? So for those of you who are visual people, I'm among you. Don't worry about it. We'll jump over and look at some charts that are examples of these in just a second. But that's the first thing. Is price in an established trend, meaning that it's got higher lows already in place? Okay. Second question. If that first question is true, has price pulled back during that trend to a quote-unquote significant price level? We'll talk more about that in a minute. Okay. So if it's in a trend, if it's pulled back to a significant price level, and the final thing is true, which is has a high probability bullish pattern formed, then those moments where all three of those things are true become our tradable moments if we're swing traders. Now, I'll be the first to tell you that there are lots of different ways to place a swing trade that might make you money. I'm not saying this is the only way for you to do targeting entries for swing trades, but the combination of the three of these really significantly focuses your entries and gives you a very structured approach to picking entries and why you're entering at specific levels. So just keep those three questions repeating in your head. Is it in a trend? During the trend, did it pull back? And during that pullback, did some sort of high probability bullish pattern form? So there are going to be some questions that you have about those three questions because they can be very vague. Like for instance, the second question, has price pulled back to a significant price level? What is a significant price level? What does that mean? You know, so let's imagine that the price has traded higher and that it has pulled back. What would make the price level in that pullback significant? Well, there are three major things that I would consider to be the most significant pullback levels. The first of those is if your price has found lateral support. We'll look at those on the chart. The second of those is if your price has found rising support, or is at a level where there's rising support, like an uptrend. And then the third of those is, has your price landed on an important Fibonacci level? So as I said, this is a broad level discussion tonight. Obviously, if you're very, very new to looking at charts and to thinking about when to place trades, each of these individual points I'm making, you could probably spend a day just researching each of these topics. What is lateral support? What is rising support? What are important fib levels, right? So if that's you, you can take this as an outline and go dig further into these. But if you have been trading for a while, you're probably familiar pretty much with what I'm talking about here. So that takes care of the second question. Third question is, all right, if my price is in a trend and it's pulled back to a significant price level, then the third question is, has a high probability bullish pattern formed? And what I mean by a high probability bullish pattern is, has one of these 6 candle patterns formed at the pullback? Okay, so I'm using these 6 patterns as the 6 most significant patterns that take place at price pullbacks. Now, I definitely subscribe to the candle pattern definitions as they're defined here. I gave you the names of each of them and a little picture of each of them. So let's just go over them really quickly. But I also will interpret these loosely when I'm looking at charts. I don't necessarily have to have every single exact thing look exactly like it's supposed to for me to call something, for instance, a bullish morning star. And the more familiar you get with the candle patterns, these 6 specifically, the more familiar you get with them, you will see them all over the place on charts that you start working with. And I'll show you plenty of examples of those in just a second. So the first 2 of those are the engulfing pattern and the piercing pattern. And I lumped those 2 together because I want you to note how they're formed. I ordered these in order, as I consider it to be, in order of importance or in order of significance. So the bullish engulfing pattern, everybody's probably pretty familiar with that if you've ever looked at candle patterns at all. We're looking at a bar that completely engulfs the bar that came before it, and that looks something like this. The first day is a down day, the second day is an up day. A bullish piercing looks exactly like an engulfing pattern, except the close of the second day wasn't able to close above the open of the first day. It just penetrates the first day but isn't completely engulfing the first day. Those are sort of kind of brothers. I think of those as brother patterns. And then the third of those is my next favorite. My very favorite is the engulfing pattern. Next favorite is the bullish morning star. Morning star has 3 bars. You've got 2 down candles, or 1 significant down candle, and then a little spinning top, an indecision day. And then you've got a third day that bounces off of that and moves higher. Okay? So you've got a reversal happening here. Imagine that happening at a significant price level. That's going to be an important thing. You've got a hammer. That's sort of a standard one. Any 1 bar pattern, I always look for some sort of confirmation. So that's why it's further down the list of importance here. Love a bullish engulfing pattern for exactly what it is. Often a great tradable signal. Okay, love a bullish morning star. Often a great tradable signal. Hammer, you might have to wait for some sort of confirmation. Bullish harami, also you might need to wait for some sort of confirmation because look what it's telling you. It's telling you that there was a big down day, and then the next day you had some amount of indecision where your trade range ended up spending its time inside of day number 1. So it's really just telling you it's sort of in a holding pattern. There's some sort of indecision there. So you might want to wait for the next day on that one too. And the last of those is super rare. And it just so happens that we actually have one of these on our charts today. We've got a bullish kicker today. I hardly ever come across bullish kickers if I'm looking at lists of stocks that have good, strong stocks in them with good price and good volume characteristics. But today we have one of those, and we'll take a look at that. And basically the story is you've got 3 down days in a row meaning the close is lower than the open, so 3 red candles, each of those gaps lower, and then on the third day, or excuse me, the fourth day, you have a price that gaps up on the open and then trades higher and closes higher than the open for the day. So you can see for sure if that happened at a pullback, we would definitely be interested there because you've got a major pullback and then a reversal off of that pullback. Now, in individual candle pattern discussions that we've had previously, we've talked about the fact that if these kinds of reversals happen and they happen with the second or with the last candle of the formation happening on volume, that makes them even more significant in terms of something being tradable. So just for now, just think of that broad level there. 3 questions. Is something I'm looking at in a trend or starting a new trend? During that trend, is it in the midst of a pullback? And then if it is in the midst of a pullback, then is one of these significant candle patterns forming during that pullback? If that happens, those become excellent, instantaneously tradable moments. There are a couple, just 1 or 2 more things to think about when you start to actually set up your trades if all 3 of those things come into alignment. But what we're going to do is look at some examples first, and then we'll talk about those couple of other things that need to come into play when you start thinking about setting up your trades. Michael, were there any questions I can answer before we look at these examples?
There are a couple that we should probably address. The immediate question that always pops up is, how do I get your formulas? You might want to address where they can go and find some of these. They are not built into TEAS 2000, but they are.
Right. Well, guys, the important thing about this, notice that I said when I'm looking at these candle patterns, there are specific criteria that need to be true if that candle pattern is on your chart or is visible on your chart, right? So with a bullish engulfing pattern, you could set that up as a formula. And you can see here that in my TC 2000, I have a series of columns set up here, and those columns each have check marks in them for any of the stocks that are displaying a certain candle pattern of interest. I've got the 6 of them listed up here. So the natural question is, where can I get the formulas? All I did was take PCFs, personal criteria formulas, and I got those PCFs. You can get those PCFs anyway from the Ask a Trainer forum that we support at warden.com. So at the very end, Michael, if you'll remind me, we can show them how to get to the Ask a Trainer forum if they're interested, and we can show them how to get to the list of the candle patterns. But you can literally just copy and paste the PCF formulas from the Ask a Trainer forum into your software, and you'll have the candle patterns. And basically, what I don't want you to focus on is too much about how to get the formulas. We can help you figure out how to get the formulas. What I want you to focus on is what is the kind of pullback we're wanting to find, like what makes something a good pullback to actually be interested in. And secondly, how to identify those patterns at the bottoms of those pullbacks. And I mentioned that when I'm looking at those pullbacks, those are loosely definable. And the reason for that is when we look at pullbacks, when we look at the candle formations that happen, sometimes it's more of an art than a science. Because sometimes there's a pattern that is so close to a bullish morning star, you may as well call it a bullish morning star. But it's not the 100% exact example of a bullish morning star. So I'm guessing that for those of you who have been looking at candle patterns for quite a while now, you're probably more comfortable with that concept than those of you who are just now starting out with candle patterns. So for those of you who are just now starting out, maybe treat them very strictly as the patterns as they're defined in some candle pattern books. But for the rest of you, you can kind of loosely define them as I do, and I'll give you some examples of that. So let's take a quick look at some charts. The first question that I asked you is price in a trend, or is it beginning a new trend? Okay, and has it pulled back to a significant price level? Let's do this. Let's pull up an example of something that has found lateral support. Okay, so I'm going to pull up a chart of when. When actually happens to be our bullish kicker for the day. So for those of you who knew that, as soon as I said there was a bullish kicker today, congratulations, you win the best student prize. So you can see here we have 3 down candles in a row, and then we have a reversal off of that and a gap up and closes higher. Okay, and some of you are going to have interpretation differences than I have when I look at candle patterns. That's completely fine. I'm just telling you the patterns that I'm actually, the definitions I'm using for the patterns that I'm looking for, but you're welcome to tweak those or to think of them any way that you want to. And so here's the first example. Remember I said there are three types of support. When I say, has your price found significant support, or is it at a significant support level? What I mean is, is the price at lateral support, is the price at rising support, or is it at an important fib level? So the first example is lateral support. I'm giving you an example of what that looks like. You can see here that your price has worked its way sideways in this case. I zoomed in on a period back in December of 2010. The price was pretty much waffling sideways. Now notice that it's waffled sideways a few times. It's in a lateral movement basically, and it pulls back into this zone, into this price zone, and it finds lateral support. Now in addition to finding lateral support, what does it form? It forms a bullish engulfing pattern. Now, this is an example of a loose interpretation of a bullish engulfing pattern. This open is a little bit higher than that close, but that, to me, is the essence of a bullish engulfing pattern. We have a reversal here that's pretty strong on strong volume. So that's why I'm calling it that. But we've got a pattern that's happening here that's giving us a strong signal at a lateral support level. So if your price finds lateral support and forms an important candle pattern, then that becomes, especially if it's on good volume, that becomes a tradable moment. Now the key thing when you're making a decision about whether something is actually tradable or not is two things. The first is, what's my risk to reward look like? You know, how far up does my price have to move before it hits resistance versus how far down it has to move before I know that I've made the wrong decision, basically. And lots of people use different targets for their stops. But what I specifically am looking at is, when I look at this entry, can I tell by looking at the chart what would be a good area, where would be a good area to put my initial stop? Because that's what I'm using for my stops when I enter into a trade. And if the answer to that is, yeah, I can see an area that makes sense for me to put an initial stop, I put my stop right down here. Excuse me. I'm so sorry. Excuse me. Whew. Got a little tickle in my throat.
Happens to the best of us.
I know, especially when you're excited about something, I guess. So if you find lateral support and you find your target and you have a good risk to reward, meaning that you've got enough room for the price to move overhead compared to what you're going to risk down beneath where you place your stop, then that's a tradable moment. Okay, so that's in the instance of price finding lateral support. Now, one caveat to that. Okay, all of these examples I'm going to show you, anything that I point out as something that is quote-unquote a tradable moment in the context of trading long, especially in the context of trading long as a swing trade. All of these things will happen either in an uptrending environment or a consolidating environment off of an uptrend. So some of you will be comfortable trading segments of price higher during a downtrend. I'm not even touching that. I don't believe that those are high probability trades in my estimation, and I think you'll find that a lot of authors of technical analysis would agree that if you're looking for the very highest probability swing trades, we should be focusing on segments of trends that are moving higher during a longer term uptrend. So that's what I'm looking at here. Okay, so either an uptrend or consolidation off of an uptrend. Okay, and then in that environment, is my price pulling back to lateral support? In this case, that's an example for when. Is it pulling back to rising support? Let me give you an example of that. In fact, well, I'll switch stocks here. You could see here that I marked a trend line for you where when was in an uptrend. So if it's in an uptrend and price is pulling back, guess what? At each of those price pullbacks, we're going to be looking for the price to touch that rising support line and form an important candle pattern. So let me give you an example of that. Let's just jump over to MWIV here. MWIV. This has got a pretty good example. And the reason I chose this as an example is because in this case, I've got a situation where there's a trend in place, but it's one of those trends that has two rising support lines that are going on at the same time. You can see here that this rising support line is getting kissed over and over again. Okay, and I'll point that out a few times here. And then you've got a longer term rising support line that's getting kissed less often, but still more than one time, so pretty consistently. Okay, let's zoom in on this. This is the example I chose to give you, right? The first example is if price pulls back to lateral support. That was what we looked at on the wind chart. Okay, the second example is if price pulls back to a rising support line. A rising support line is nothing more than higher lows that are in place that can be connected by a trend line. And the more orderly that rising support line is, meaning the more often it's being touched by price as it pulls back, the more I trust that rising support line. So if my price is rising along with the rising support line and pulls back and forms an important pattern, then that's ideal. And in this case, this is a bullish harami pattern that I've circled on the chart here. Bullish harami, remember from the patterns that I showed you, is the long down day and then a small day the next day where the body is inside of the body of the first day. So that's a bullish harami right at that rising support line, and turns out that's a pretty good entry. What makes it a good entry is that I know where my stop needs to be. I can either place my stop based on lateral price behavior that came before it, or what I can do is place it at the bottom of the actual pattern itself, since this should be a pullback bottom. That way we're not risking very much, but if the trade goes in our direction or in our favor, then we can ride it until that pattern top is cleared, at which point we can move our stop up to the top of that pattern. So we have a great place, a very obvious place to place our stop, and we also have plenty of room for the price to continue to move, especially since it's been in a very orderly uptrend along that period of time. We don't see anything overhead in the near term anyway that gives us cause to doubt the risk to reward situation that we're in. So in this case, we've got a price that pulls back to rising support. We've seen an example of lateral support. We've seen an example of rising support. What about when a price pulls back to a significant Fibonacci level? Individual price charts, like stock price charts, have examples of these, but probably the clearest example of this kind of behavior recently has been that S&P 500 chart that we could look at. So let me just jump over to that real quick. I've got a Fibonacci retracement. For those of you who don't use Fibonacci retracements, all I did, if I look at a weekly chart, all I did was use a Fibonacci tool, which I got from my drawing tool library, and I just grabbed a fib retracement is what it's called. You can Google that if you're not sure what all goes into that. But basically, I drew from the top in October of 2007 to the bottom in March of 2009. And I want you to notice that over and over again, since that March bottom, the Fibonacci levels that have been drawn based on my trend drawing have held, meaning that the price has reversed pretty significantly and consistently at those Fibonacci levels since that March bottom in 2009. The more often a Fibonacci level holds, meaning the more often for a specific chart, after I draw a Fibonacci line, the more often that specific chart's price reverses at the levels that get drawn, the 23, the 38, the 50, the 61, etc., the more often that happens, the more I trust that Fibonacci level. So you notice that on the right-hand side of our chart, just the last month or so, what we've seen happen here is that this price pulled back, and it pulled back right to the 50% level, which even for those of you who don't really use Fibonacci levels, all that means is that the price relative to the top in October 2007 and the bottom in March of 2009, this price is 50% of the distance between the two of those values. So that's a significant level, essentially. And you can see here that this S&P 500 chart has really spent most of its time recently just basically consolidating between the two of those. Now, this is on a weekly basis. I go to a daily basis. that it gets a little more drawn out here. So this is the major decline from this top, and then you can see the consolidation that's happened between the 50 level on the Fibonacci drawing and the 61 level on the Fibonacci drawing. And what I want you to notice is that, especially right back here, okay, even on index charts, we see these candle patterns that form that are significant for some reason. So what we see here is some sort of variation of a bullish morning star. You've got a major price pullback this day. You have a day of indecision that's at the bottom of the previous day. And then you see here you open just above that, and we traded very much higher that day. That was the 23rd, it turned out, 823. And then you notice we worked our way higher again and found this 61 level again. And then we pull back again, and we've got a hammer at the bottom of that pullback yet again. And then we work our way higher again, we pull back, and at this point we had a little spinning top here at this level. Now today, Michael commented on this a little bit. This is interesting. What do you think is going on with this, Michael? I mean, I don't want to put you on the spot. I just have my general inquisitiveness is kicking in here. What do you think is going on here? Do you think that, well, basically tell them the story of how that day unfolded in case they don't know. Let's go to an hourly chart.
About today?
Yeah.
Yeah, this afternoon I was sitting at my desk this afternoon, and I had a real short-term chart on, a minute chart on, and I saw this thing take off. And for a while, it looked like the daily chart was going to form a hammer because it hovered in the last about 30 minutes of the market, hovered near its open, so it was forming a nice little hammer, and then it just went, the last 30 minutes of the market went out of its mind. Great looking W bottom on the 15-minute chart. If you scroll out, you'll see the great pullback down to that kind of double bottom there on a 15-minute chart, and it bounced out of that really strongly. You know, it's back at the 50 fib retracement that you were talking about. What's it going to do tomorrow? Don't we all wish we knew? I'm definitely not bullish at this point, but it is back in that zone that it's been in that you've been defining, yeah. And so who knows? Could it travel back toward the 61? Yeah, but you know, that's very bottomy looking. But there's too many other things in the market right now that don't necessarily confirm that. But I mean, it looks like a strong move, capitulation selling with the bulls moving in at the end of the day, driving it up, pulling it even past the hammer, and just making a really strong bullish candle there at a very significant level. Can it hold that? I don't know, but it was.
And you're a smart man not to say for sure, because obviously you don't know. But it's just always interesting to see what's in people's guts. Because in my gut, I feel like probably this price was hammered lower to shake out the stops here at the 50, because there's so much, you know, so many people holding on to this level probably with their stops down here at this level. So that's my gut feeling. My gut feeling is that the end of the day was the real part of the day. But again, I mean, you know, you're smart not to make that call, because it could go either way, and you just have to deal with whatever happens. But just such an interesting day today. Okay, so let's recap here. All right, if we're in a situation where we can identify something that's in an uptrend that is pulling back, okay, and it's pulling back on a candle pattern, then that's quote-unquote our tradable moment. If we have a good risk to reward, meaning we have enough space for the price to keep moving higher, and we have an obvious stop to place that's not very much lower than our entry. That's basically all I've said so far. Okay, so in a lot of words, that's all I've said. Okay, I want to layer a couple of other things on top of that. Okay, when I say, is price already in an uptrend, or has it just now started a new trend? Okay, one of the things I'm liking to look for, or that I think most of you probably like to look for, is leading into the bottom of a downtrend. Okay, is your oscillator information that you're getting diverging from what price is doing? So like right here, you can see for GNK, I brought this up as an example. If I look at what the price is doing for G and K across this period on a daily chart, and I look what the MACD is doing across that period, my MACD is drifting higher, but G and K is continuing to move lower. So when I look at prices with people and with indicators with people, you know, we can sit and look at a chart and say, okay, well, assuming that this chart, all we had was the divergent information, this information right here, assuming that that's the case, is that yet a tradable moment? No, it's not yet a tradable moment. In my opinion, it's not yet a tradable moment until that price rolls over. Okay, so we've still got lower lows on this chart, but you notice the price bounces and then it makes a pullback. Where does it make a pullback? Let's zoom in on it. Okay, it makes its first pullback, and you may not be comfortable with that guy as an entry, but it's very closely related to a bullish morning star. That formation right there is very closely related to. It's not exactly, but it's, yeah.
Hey, Julie, let me interrupt you right there because that really brings up a great point. What you're looking at right there, we've had Harry Boxer on here many times. That's exactly what he does on an intraday basis on 1 minute charts. He looks exactly at that pattern you're seeing there, but he does it on an intraday basis. Yeah, and that's really important for people to understand. This is fractal. These things work in other time frames. That exact pattern is what Harry uses.
Yeah, so when we started the webinar, I said either if you're a swing trader or if you're looking for swings higher in price but inside of a trading day, if you're an intraday guy but you're looking for the equivalent of what looks like a swing trade on a daily chart, that's exactly what I mean. If you go to an hourly chart, for instance, an hourly chart, there are or 15-minute chart, a 10-minute chart, a 1-minute chart, doesn't matter what the period is. You will see these exact same patterns that take place no matter what the time frame. You'll find hammers, you'll find bullish engulfing patterns, you'll find bullish morning stars, and I've watched some of Harry's stuff that he's done with us, Michael, and he is very fond of a morning star. And most people that look at candle patterns are super fond of a bullish morning star because the story that it tells, if you look at what the chart looks like, the story that it tells is a great story. It's a very, I guess, encouraging story, which is we've got negative sentiment here, we have total indecision on the next bar, and then we have the reversal of the negative sentiment on the following bar. Now, the higher the volume can be on this guy, the better. And the higher, obviously this is a very low volume situation here. So use your own judgment on your price levels that you're willing to trade and your volume levels that are important to you. The big picture is this. Okay, either my price is already in an uptrend, which was the case for MWIV. Okay, let's look at that one. Okay, either it's already in an uptrend, as was the case in the example we looked at here, or it's been in a downtrend but has started to roll over, and even better if it's got indicators, oscillatory indicators, that have been divergent in the face of that price moving lower. So if it's starting a new uptrend, the most important thing is that it's formed at least one higher low. Okay, so instead of continuing the lower low formation, if it's rolled over and made at least its first higher low, and on that higher low it forms a significant candle pattern, that becomes a candidate for a tradable moment. Okay, if it finds lateral support, candidate for a tradable moment in either a rising support line or a consolidation off of a rising support line. So those are pretty much the key things. Lateral support, rising support, important fib levels. I want to watch for stuff that's in a trend and pulling back or beginning a new trend and pulling back. And the patterns that I specifically want to pay attention to are the bullish engulfing pattern, bullish piercing, morning star, hammer, harami, and kicker. And for me, in that order. Now, if you don't know much about candle patterns yet, you can always go pick up a candle pattern book or just Google candle patterns and you'll find all of them. I think for me personally, in the bullish context, those are the 6 most important ones. There are 70-some that you could pay attention to. So it can't hurt for you to at least know what those are if you want to learn about those. But if you really want to focus on the ones that are really great signals in the pullback context, those 6 are great 6 for you to start with. Okay, let me see here. I was going to mention, Michael, that if you'll look over here, I've got those columns that put check marks next to everything in my list over here. For those of you guys who are free stock charts users, if you're coming from the website, this is one of those things you can't do at free stock charts that you can do at TC2000. So if you're going to do a trial, try something like this. You can scan and create conditions for your watch list and put check marks next to everything in a watch list that's doing a certain thing that you think is interesting. And in this case, what I've done is I've put condition columns for each of my 6 candle patterns that are important. Now remember, if you don't already have candle patterns in your system, what you can do is we'll show you how to go over and copy and paste those from a website that we have. You can copy and paste them as a personal criteria formula or a condition formula, and then you'll be able to use them as sortable columns as well. But I want you to just note, Michael, and everybody else, there are a ton, relative to the amount of candle patterns there normally are in a given day, there are a ton of candle patterns today. It's crazy. This is the bullish engulfing pattern. Look how many check marks there are in this list. Some days you have one stock in the Russell 3000 that's got a bullish engulfing pattern. This one's the bullish piercing. Bullish piercing has a huge number. It's crazy. Like I said, the more rare of these even have examples today. I didn't see any examples of morning stars. Let me see if there are no morning stars that I saw come up today. Hammers, tons of hammers. Haramis, also a lot of haramis. And there was even a kicker. That's the kicker. That's crazy.
Hey, while you're on that chart, Julia, somebody asked an interesting question about the kicker, because you do usually with a kicker you get a big old candle.
You mean on the final day?
Well, on the kicking day itself, it's usually a large candle, and the question was, if you're at the kind of a bottom of a trend and you get that big candle, how do you know that all the buying wasn't just kind of a reaction and then it's going to peter out the next day? Is there anything that gives you a feeling that this is a real, pattern that's going to actually make the reversal?
I'm not even paying attention to this kicker for the following reasons. Okay, if we follow the context that we talked about, is that stock in a rising support situation? No, it's made a lower low. So I'm no longer looking at it as something that's in an uptrend. So immediately that takes it off of my radar as a long candidate as of now for me. Because remember I said to trade, if you're a swing trader and you're trading long, you're trying to find price segments that are moving higher within the longer term trend. Now by the definition, kind of the way of trend physics, if you look at it that way, in order for a price to rise over a period of time, it's got to spend more time moving higher than it spends moving lower, right?
Yep.
So if you are going to be trading long, why don't you find charts that are in uptrends so that their up segments are longer, as opposed to things that are in or beginning downtrends, in which case if you try to trade that long, that could reverse on you much more easily or with much less indication than if you were in an uptrending scenario. Usually if you have a swing trade on in an uptrending scenario, a lot of times as it works its way to the high end of the swing, you'll notice that the price activity will peter out and give you some indication before it reverses on you. A lot of times if you're in a downtrend and you trade to the upside, that thing can reverse on a dime and roll over and move lower again.
Yep. So
why trade against the trend, essentially? And we'll be cheesy one more time here and just remind everyone that the trend is your friend.
Well, I think the key that you've been talking about that people have to realize is these patterns are important. These candle patterns are important, but they're important if they're somewhere, if they're at a point that's significant. I think that's what you've been trying to make everybody understand.
Exactly.
You can find these candle patterns all over the place.
Exactly.
But they may not be signs of reversal because they don't have the other aspects of that.
That is the point. That's the whole point, Michael. That's totally it in a nutshell. These patterns happen everywhere, but you should be paying attention to them when it makes sense in the context of what price is doing. And if you can find that pattern in the context of an uptrend where the price is pulled back to what's already a significant level, then that is a good signal. But if you find it in the midst of something that's making its first lower low or second lower low, then that's a nice kicker. It's cool that it happened because it rarely happens, so you can ooh and ah at it for a minute, but that's not the highest probability trade that you could make.
Right. A couple of other things that we ought to probably pause and talk about here is different ways you can use those candle patterns. You've used them in sorting all your columns. I know you like that a lot because it doesn't get rid of the stocks. It simply ranks them by the different patterns.
Exactly.
And that's obviously something you could do in TC that you can't in free stock charts. But the other thing you could do is you could actually build a scan with these patterns as well as other conditions to eliminate all the stocks. I don't know if you've got any already pre-built, but that's something that people need to realize too, is that if you only want to see the stocks that meet these a single candle pattern, you could do a bullish engulfing scan and only find the bullish engulfing stocks.
Completely.
And you can also put in other conditions. So if you have certain price and volume and those kind of things, you can do it.
Let's just do an example just super quick. Okay, if I go up to do a scan, let's just say I'm going to add a bullish engulfing pattern to that. So after you copy and paste the patterns, everybody, into your software, they're going to be listed as one of the conditions you can add to a scan forevermore going forward. So you can see here I have a bullish engulfing pattern listed here. So I'll select that and bullish scan, we'll call this. Okay. And then if we wanted to add a price condition to that, just real quick, we could say price is greater than, let's say, at least, $10 a share, something like that. Okay, and then we could do a volume condition or whatever conditions we wanted to. We could add conditions from the library here, or we can add conditions directly from indicators on our chart even. And then what you do is you just go and scan. And it would literally go through all of the things that belong to in this case, the Russell 3000. And you can see here that there are 671 items that belong to that list now, as opposed to, can you believe that number, by the way?
That's amazing. That's amazing.
As opposed to 2,900 and something, there are still 671 items that have a bullish engulfing pattern today. It's crazy. And this is kind of neat, too. You can see here that in this case, I still have my check marks up. And you mentioned, and I really like to do it that way. The reason I like to put the check marks is because sometimes something is more than one pattern.
Right.
Like you can see that this is a bullish engulfing pattern, but it turns out that the last day of that bullish engulfing pattern is a hammer. Or sometimes you'll have something that is a hammer that also is a harami, for instance. Those commonly go together. So if you do scans, like Michael said, that's going to eliminate everything in your watch list that isn't doing what you said. But if you add those conditions as sort columns and put the check marks on the things that are doing what you want, then you can put a bunch of those check marks out there, and you can see any stock anywhere within that list. Is it a bullish engulfing pattern? I know just really quickly because it's got a check mark next to it. And for me, I mentioned I'm super visual. I mean, I'm guessing a lot of people who use charts to do their investing are very visual people. I think that makes so much sense, and it's so easy and a great way to to visually interact with what the patterns are and what's going on,
One of the things that I love to do with these candle patterns, once I find them at significant, levels, would be to throw some of my favorite indicators at them. And one of the things you could do right there on that chart, I know you're more of an RSI person, but you could add to that scan that you just created an oversold stochastic as a condition to continue to filter. Why don't you show how you can create that? Because free stock charts folks can't see that.
Yeah, we already did a scan, right? And that scan has two conditions in it. And I mentioned I could either go up to add condition to add more conditions, or I can use my indicators that are on my chart to add conditions. So let's say in addition to those two conditions that are already in place, I also want to say that stochastics needs to be oversold. Well, I can take stochastics on my chart and create a condition and say I'd like for stochastics to be less than a value. And let's say in the case of stochastics, we'll say less than 20. And I want to scan, so I'm going to go up to scan, and you notice it's going to ask, do I want to replace the current scan or append what I just created to the current scan? And I want to append it to the current scan. So now if I go and look at the results, I can see there are 181 items in the list, and if I look at the scan detail, you can see that that condition's been added as one of 3 conditions in the scan instead of the 2 that I originally added. So it's really neat. You can put library conditions like candle pattern conditions and chart conditions into the same scan and use them together. So you can kind of keep adding to scans as things look important to you. And the neat thing about that is if you get the results and it doesn't look like it's as important as you thought it was going to be, you can always just open up the scan and go delete that last condition you created and go back to the results that you had before. It's pretty neat that way.
Let's filter through some more of these questions because we do have a lot. And if folks want to hang with us, we'll show them at the very end kind of how they can get those candlestick patterns and copy them into their TC1000. But talk a little bit more about volume with these patterns. When you get these reversal patterns, how do you look at volume and what's significant to you about it?
Well, okay, in the ideal scenario, let me just pull up an example. We'll find one of these on one that we've already looked at, okay? And I'll show you why I pulled it up. So typically, during the actual pullback period, during the pullback phase, the ideal scenario is I guess the very best case scenario is that while your price is pulling back, you want the volume to be shrinking pretty much, at least at the end. As it approaches the end of the pullback, you want the volume to be shrinking, meaning that at that point, people are less decisive about, what the price should be doing. And then on the actual trigger day, we want the volume to pick up as much as possible. Okay, so I pulled up some example charts here, or I wrote some down that we could take a look at in the event that that kind of thing came up. So let's look at CADX here and see what we see. I marked something for us, I'm pretty sure. There it is. Okay, so this is a super clear example of a bullish engulfing pattern. This is relatively low volume, but in terms of the volume pattern, I marked this one because in terms of the volume pattern, this is a great pattern. This is what we want to look at. We've got our price that's pulling back. In this case, I marked this one because it just formed its first higher low. You can see that here. It was making lower lows. It just formed its first higher low. And if I zoom in on that, it forms its first higher low and it forms a bullish engulfing pattern. Not only is it a bullish engulfing pattern, but it's a bullish engulfing pattern with very close to what you could call a Mare Bozu. I don't know what else to call it, but that's a day where the open is the low and the close is the high. So, pretty much all your activity was trading higher during the day. And so you see here across that time, while the price is pulling back, you can see your volume is drying up here. As it reaches the last day of the pattern, it's the lowest volume in the period. For all four of those candles, the volume was shrinking. And then you notice on your signal, the volume picks back up again. So that might be more pronounced on charts that you look at. The more pronounced that is, the better. But you want your volume to be pretty high on your trigger day, but in terms of the actual formation or the pullback, at least as it nears the end of the pullback, I like to look at it drying up a little bit.
I've got a really interesting question to ask you in a minute, but several of our free stock charts folks are asking, again, how do they get the free 14-day trial? First of all, you log into TC2000.com, and in the login screen, put in your freestockcharts.com login information. Once you're in the program, if you could, Julie, click that Marketplace button for me.
Sure.
And you click that Marketplace button that's up at the top left, and you'll be offered your free 14-day trial. All you have to do is click on that. When the next box pops up, you can either set up your account or you can say, ask me later, and you're off and running. It'll start working for you immediately. But be sure to sign in with your free stock charts information, the same that you use to sign into free stock charts, so that all of your charts and your chart layouts and watch lists and all that will come over with you to your free trial for TC2000.
Okay.
There was a really interesting question, Julia, about when you find these patterns and you think it's a true reversal, how would you set a target? Is there a way that you would look at setting a target of where you think this thing is going to go?
Well, there are different ways. There are different answers to that depending on what the price formation is that you're looking at. Let me give you an example. Okay, let's say we were going to use this as our entry. Obviously, we would place our stop, maybe not obviously, but anyway, I would place my stop at 644 if I were going to enter here. That's the previous bottom down here. I would give it room to pull back a little bit and test that bottom. So that would be my initial stop. In terms of the actual entry, I saw somebody ask that question as well. What's your actual entry? If the price is moving quickly inside of the day and it's up north of this close, then you might, depending on the situation, you might be willing to place a market entry, or you might do a limit. So you might place a limit entry and wait for the price to pull back a little bit toward the end of the day so that you don't, you shave a little bit of money off of it. But generally speaking, if I see a pattern like that, I'll just do a market entry. That's fine. And then, so my stop is down beneath at the previous low, and my entry in general is going to be a market or some sort of limit, very, very closely associated with the current price at that point as I'm looking at that price develop. And the question is about what's my initial target, okay? The truth is, Michael, that if there is a pattern that is on the chart that is a pattern that is conducive to a price target, then I'll use it. But if there's not a pattern that's conducive to a price target, then all I'm looking for after my trade is entered is a degradation or some sort of degrading characteristic of the price trend. Okay, so here's what I mean by that. In this case, my price made a higher low. That's what caused my entry. So let's say I got in right here. Okay, and then the price pulls back a little bit, but my stop's way down here, so it doesn't matter if the price pulls back a little bit. Close is higher. Well, this close is higher than the high of this pattern here. So I would continue to let that ride, and then you notice that the second day is higher, so I would continue to let that ride. But then you notice that this day right here closes down. That's my first indication that there's some sort of hesitation in my behavior. So what do? I move my stop up. So it's not necessarily that I exit the trade there. It's that I move my stop up to protect what I've already made. And in this case, I move my stop up to the top of this day, because if my price pulls back, where does it make sense for my price to pull back to before I would get out? It makes sense for my price to pull back to somewhere around 720, and you might place it a little, you could either do it exactly at 720 or a little bit below to give yourself wiggle room. And in this case, if you placed it exactly at 720, you would have been stopped out, and if you placed it a little bit below 720, you wouldn't, in which case it would have floated a little higher and then moved sideways. So either way, protecting your profits would have been a good idea in that case. So in that case, if there's not a very clear measurement technique for the pattern that got me into the trade, then all I use is the degradation of whatever the swing is that I'm in. But let me pull up an example of a consolidation or a wedge, which is an example of something that has a measurable target. So in this case, this is a chart for Walmart, and this is back in March of 2011, so March of this year. And I often use this example. This is actually a good example of what we were talking about tonight. I didn't use it as an example, but it's a good one. You can see here that my price is in a wedge. And I can tell that it's in a wedge because you notice that the candle parts keep touching a line. You see that? So over and over again, they're touching this same line, moving to the right. And down at the bottom, the lows of price keep touching the same line over and over again. So I've got some sort of ascending triangle / wedge that I'm looking at. Well, this is a beautiful example because I want you to notice that as that pattern's taking place, the volume is shrinking up while that's happening, and then it pops out of the top of it. And often with a wedge, what you want is for it to pop out of the top and then pull back to your line. But notice what forms at the pullback. What forms? A piercing pattern. So I've got a pullback to a significant price level and a piercing pattern, one of the 6 most important patterns to look at for pullbacks. So that becomes a tradable moment, and lo and behold, the price moves higher. So in this case, this has a measurable target, and the measurable target usually for a wedge situation is, let me just do it this way, you'll measure the height of the wedge from the low to the high of the wedge, and then you can just take that line, and from your entry, assuming that it's here, that will become your target. So my target would, my initial target would be 54.32. Yep. Now, obviously, keep an eye on your stops until you make it to there, and protect anything on the way up if that is if you've got a big enough move to protect your profits on the way up, then do that. In this case, 54 would be a good initial target.
All right, we got to do one more thing and then get out of here, and that's show them how to get some of these candle patterns over at the website. So if you want to kind of do that real quick, then we need to wrap it up. But you guys will be able to do this and copy and paste these in as personal criteria formulas in your TC2000.
Let's see. Let me pull up Warden.com real quick here. And let me know when you can see it.
We're good.
Okay. If you are looking for candle patterns, what you guys can do is go to Warden.com. Just point your web browser to Warden.com. And in the upper right-hand corner, there is a discussion tab that you're going to select. And within that discussion tab, actually probably the easiest thing for you to do is just go to search. And within search, you can just search for candle patterns. So put candle patterns right here. Just fill that out and select search, and it'll send you to posts that include written out lists of candle patterns that you can literally just copy and paste.
Right.
Now, when you find the candle patterns, guys, what you want to do inside of TC2000 is, let me bounce back over there. Once you've done that, what you want to do is copy and paste the pattern that you find at Warden.com, go to Conditions, and New Condition Formula is the choice that you want. Oh.
Yeah, it looks like go to webinars freezing it up on you. Yeah, it just froze up on you.
That's okay.
Anyhow, you will click on new condition formula, and it's going to open a window.
There it is.
Yeah.
Okay, so you should be able to see it now. Go to the webinar. Just freaked out for a second. So choose new condition formula. You're going to give it the name of the candle pattern, and you're literally just going to Control V to paste into this field right here, and then just click OK. And then, like I said, every time you go to create a scan or to sort by condition, all of your patterns, whatever you named them under, they're always going to be listed either in your Add column button right here, or they'll be listed as conditions in your Scan button.
Yep.
Okay.
All right. Now, one other quick thing. If you want to see an archive of tonight's webinar, remember to go to Warden.com right at the home page and go ahead and you'll see the archive probably by lunchtime tomorrow. You can watch it again, and it'll give you a chance to go through all of these slides and all of these different charts in TC2000. Again, we want to especially welcome those of you that came over from freestockcharts.com tonight. If you want to do your free 14-day trial, you're welcome to do that. Again, go to TC2000.com, log in with your free stock charts information, and then click the Marketplace button, and you can get started with your 14-day free trial. All of you Telechart 2000 users, TC2000.com users, thanks for being here. We hope you enjoyed tonight's session. Julia, great job. Really good stuff.
Cool.
And that's it for tonight, folks. We'll keep your eye on the website. We'll let you know when our next webinar is. Thanks for being here, and we'll talk to you all soon.
Bye, guys. Have a good night.